All right, what's going on, folks? Happy Thursday, October 9th, 2025. Here with Josh, co-host, Crypto Report. Josh, how you doing?
Great. How are you?
I'm doing just fine. Another week of disappointing results. Let's go ahead and just call it as it is. But obviously, we see light at the end of the tunnel, and I think that's probably what I want to lead this conversation. Start with this concept of this that we see light at the end of the tunnel. We expect prices to be higher through the end of the year, but unfortunately, week to week, it does tend to be a lot more choppy than what most people expected, myself included. And therefore, some of the enthusiasm that a lot of shorter-term traders in particular exhibit may be, gone. I mean, it's tough to be able to hold through some of these emotional swings, particularly in some of the more volatile assets like Ethereum and Solana. But I want to go ahead and just get your thoughts here. Obviously, October is seasonally the strongest month out of the year. We know that, but we haven't really picked up yet. We did stick an all-time high on the weekly last week. We did trade into all-time highs this week, but still, we're not getting that thrust that I think most people expected in October. It's still early, I get it, but what are your thoughts? Give me just your general idea here. What's going on?
Yeah. I would say that October's been great so far. I'm going to go against the grain.
No, that's fine.
We moved $20,000 in the last week and a half on Bitcoin. We were trading $109,000 October 27th. Oh, sorry, September 27th. It has been 10 days ish, and we have gone from 109,000 to all-time highs and now consolidating. So I'm not stressed out like everyone apparently is. It's shitty when you have TradFi equities that are flying up in a straight line only, but I don't think this is something to be concerned about. We're consolidating 1% below the highs on Bitcoin. And if we look at previous kind of breakouts like we've had, so my example I was pointing to in a recent newsletter was, let's look at the September, October 2024 breakout into all-time high, where we base below the previous all-time high at 69,000, we had a couple of pushes up above 70, 72. We based below that for months on end. And then off the bottom, we essentially went straight up to 72. We pulled back to 69. And then we went literally vertical and ran to almost $110,000. And so everyone getting stressed out here, I'm not worried at all. We just had 10 days essentially of even call it a week straight of green price action. So a couple of days of consolidation is not the worst thing for this market to continue.
Not to sit on my pulpit and preach again, but I think you really got to take into consideration the primary trend, right? And whether you're doing that through a 200-day moving average, a 50-day moving average, or they're on the daily or the weekly or the monthly, market structure is still very firmly to the upside. Am I wrong?
Absolutely
Series
correct.
of higher highs and higher lows. It's just that simple. You remove some of these candlesticks, which I know we talked about this earlier this week. It was kind of a fun conversation, the latest CMT symposium in Dubai. Somebody gave a presentation that was essentially like, hey, if you have a hard time holding through the day-to-day, turn off candlesticks and simply look at the rate of ascent, in this case, because it's an uptrend, of some of these moving averages. Can you do that? And, talked about it yesterday, did a Twitter space just talking about our expectations through the end of the year in general for not only crypto, but the entire market. I mentioned that as a thought experiment. Could you trade better if you simply turned off the day-to-day candlesticks? And if you're watching the stream here, I just did. Now, I'm not telling you that you're going to be more profitable by any means, but does this certainly look a lot more bullish than bearish when you turn off the candlesticks and look at the slope of the underlying primary trend, which in this case is the 200-day moving average? Yeah. I think it does a hell of a lot of justice for those fair weather traders, or just those traders that don't have the ability yet. They're not emotionally scarred, I guess, from being faked out enough times, to sit back and relax. I think you're absolutely right. We were just at all-time highs on the weekly. We hit intra-week all-time highs this week. I think it's super, super, super important here to stress that primary trends are still up. And we can look at that either through, like we talked about, market structure, We can look at that through moving averages, a million different ways. And, to further your point, I think, given the weight of the evidence, we're still in a bullish momentum regime. We're still hitting higher highs. We're still hitting higher lows. We're still trading north of a primary uptrend via the 200-day moving average. The path of least resistance is higher.
Yeah, absolutely. With the amount of green we've seen, I don't think this is surprising. And one thing in TTI is, we are looking further down the road, right? The end of Q4. And so people who just want euphoria every day, like that's just not the reality for most assets.
Yeah.
And so
let me get in there really quick and say something really quick, because we've talked about this extensively as well. And I don't mean to cut you off, but it's to support your idea here. It's with gold, right? So Cross-Border Cap, for those of you that don't know, a player in the global liquidity space, fully endorses service, by the way. It's a really good read on Substack. Does obviously focuses on global liquidity, and he's done a lot of work recently with the correlation between Bitcoin and some of the precious metals. And that was a correlation that we figured out a couple of months ago, right? We looked at year-to-date performance between Bitcoin and gold, and we noticed that they tended to track each other over the long term, but over the short term, they are almost directly inversely correlated. So what does that mean? It means when gold's ripping, Bitcoin tends to consolidate or potentially move down. And then when gold starts to consolidate or pull back, Bitcoin tends to rip. It's the same trade in essence. We call it in TTI, we call it the macro liquidity trade, right? So global liquidity is going up and it tends to push precious metals and crypto up with it. Think of it as an off-ramp to just surging inflation and liquidity in the markets. This is kind of a pressure release, if you will. And right now, obviously, gold is continuing to rally into all-time highs. And so while we think this latest oscillation higher in gold is probably closer to the end than not, and by latest oscillation, I do not mean primary trend breakdown. I just mean the breakout that we got in late August. Gold has gone parabolic. We're probably closer to the end of this parabolic move into the next consolidation fractal at minimum. And at that point, Bitcoin is going to take off. It's going to take the torch. Now, we have the data to support that claim. It's not my opinion. And if you don't believe me, well, you can go and run the studies yourself. Look at the correlation between gold and Bitcoin, superimpose price over the last 10 months. You'll notice that there's a correlation there. And so I'm of that opinion that when or if gold slows down, Bitcoin will pick up the torch and continue to lead higher. I do think it's incredible that even with gold going as parabolic as it is, that Bitcoin is even holding up. And like we said, hitting all-time highs last week. I think that's an incredible indicator of relative strength, and obviously, particularly in assets that pull back, something that we look for, right? We want to own the strongest assets in the market, whether that's crypto, gold, stocks, whatever. And in a period where we expect Bitcoin to potentially be pulling back or consolidating slightly because gold is running, and it's not, we just hit all-time highs last week. I think that is a huge indicator of what is to come over the next 3 months of price action in Bitcoin. Am I crazy? Am I off kilter here?
No, I'm with you on that. And I would even say, something we've talked about for the last probably 6+ months in TTI is that we look at the, like you mentioned, we look at the Bitcoin gold ratio, and, before Bitcoin's market tops, every past cycle, and I understand there's not a lot of data sets to support this kind of hypothesis, but before it tops, you have an explosive move from the Bitcoin gold ratio where BTC outperforms gold by a massive margin. And so we have yet to see that this cycle. For most of this cycle, the Bitcoin gold ratio has been trading just below its 2021 top. And continues to do so now. We're down, call it, down 15-20% from the 2021 top. And so when we kind of go into what you were just saying about, potentially a local top or a little bit of distribution in gold, and not necessarily a change to primary trends, but some slowing down and consolidation, we can expect this Bitcoin gold ratio chart to move back towards all-time highs, and then potentially see that break, where then we can use the fibs as an example to understand where we think it might potentially go, and kind of look at some of the moves it's made over the past 3 to 4 bull markets for Bitcoin.
I do want to point out really quick, and I'm glad you said that there's not a whole lot of data yet. You know, Bitcoin is still very young. We have like 15 years worth of data now we can work back off of back in 2010. So that, that's not a lot of data to establish things like secular trends for sure. And these correlations are still very nascent, right? It's very early. One thing to point out is that gold hasn't had the type of move that we've had over the last, really since March of 2024, since the late 70s. And so this is out of the realm of ordinary for gold as well. So will that relationship between Bitcoin and gold continue to exist? We don't know, but it is interesting to keep looking at maybe once a week, where is Bitcoin in terms of gold? If we're trading 15-20% below 2021 highs, that just means gold has been the better trade, at least as of this year, right? So we'll see if that continues to go. I will say that through some of the statistical work that we've done, we do know that gold moves at about 1.8 times global liquidity as measured through a proprietary model. It's not just like your M2. Bitcoin is closer to 9x, and that makes sense, right? I think we can all agree, we understand Bitcoin is going to be a higher volatility asset, higher beta asset, so it should outperform gold. But unironically, this year it has not. So shout out to the people that have owned gold and and stayed with it. We have. Okay, I want to move directions, right? We're long, we're long Bitcoin. We have positions on only spot Bitcoin. We have positions in IBIT. As a matter of fact, last week we added into the IBIT play. If you're long, or I should say if you're long Bitcoin and you have the underlying idea that Bitcoin will continue to rally through the end of the year for no reason other than the fact that gold's rallying and they tend to run, within the same primary trend, which once again, I agree with that. You have to assume that IBIT is probably one of your better bets, if not your best bet at capturing that move in the TradFi market, particularly if you're trading options. IBIT options are very, very good. In my mind, it's better to trade. I've had more success, I should say, trading IBIT options than MSTR options, particularly because of the implied volatility. So we're long IBIT. We got long more IBIT through the end of the year into 2026, and continue to think, as you can see here, if you go back onto the weekly, this was an all-time high. So realistically, nothing to worry about. I want to shift gears really quick, and I want to talk about the next big trade. Obviously, I'm very bullish on it, but it's struggled. It's definitely struggled over the last couple of months, not just weeks here with Ethereum. We did come up and test all-time highs near 49. We're looking for a potential 5,100 break for our next run up to 6,300, but that has kind of fizzled out over the last couple of months here now. Still very long Ethereum. It's actually my largest holding within the crypto space. I still fully expect this 3,950 to 4,000 area to hold as support. I do think this is a consolidation fractal underneath an all-time high, which, that's kind of been the theme. Going back this year, gold consolidated underneath all-time highs before breaking out. Silver consolidated under 15-year highs, if I'm not mistaken, before breaking out. So this type of stuff doesn't surprise me, doesn't necessarily feel good, right? It's a bigger position than my Bitcoin position right now from a trading perspective. What do you think about Ethereum within the context of the last couple of months consolidation? Are you bullish? Give me your thoughts, and I want them unadulterated. Seriously, what do you think with Ethereum right now?
Yeah, hey, it sucks when one of your biggest bags is chopping while, as an example, traditional equities are flying, right? So you feel kind of misallocated on those big green days when the equities in your brokerage are moving, but, Ethereum is dragging your account value down. Ethereum at the same time went from 1950 that we called here, live, and we put trades on while we were talking back in, what was it, May of this year, right, to essentially $5,000. We had a doubling in a few months. And while that's not like, oh my gosh, because lots of crypto assets double in short periods of time and even shorter, that was something that you could put any amount of size into and see a lot of success. And that's just spot. We're not talking ETH, in which, I know yourself, many other traders, I have some huge winners, from 500 to 1,000% winners on those ETH contracts. And so where we are now, in my mind, is we are just what you said. We are range bound below an all-time high. And so we're looking at essentially a $4,000 to $4,750 range. And until Bitcoin kind of breaks out of its consolidation, I imagine that we're going to be kind of stuck here. What I want to see is ideally we're making higher lows on the daily. inside of this range and kind of building up back towards that 4750 level. But I think this is just something you have to sit through. I do think it will explode upwards, especially in tandem with Bitcoin when it's done consolidating. And the other thing is we have time, right? Like we bought, at least for most of us.
I mean, we're
our
allocated into
positions-
2026 and 2027, so time's not a problem. It's more so trying to get people to just kind of calm down. And by the way, this is not a TTI thing. It's just, you go out on Twitter and people, particularly on, I can't call it Twitter anymore. You go out on X and people, like, you get a 4% down day, which, by the way, is a completely normal move in Ethereum. Most people don't understand how volatility works, and so when they see like a 4% down day, people freak out. Folks, this Ethereum moves on average 4.21% per day, so really you shouldn't be freaking out until you see like an 8 to 12% move in a day. Normal volatility kind of dictates the range of the day, and we're seeing, as you said, it's simply a consolidation range. We're not seeing any major like punch through supports or anything. As a matter of fact, the most previous attempt to punch through back here at 39.5 was held up very well. Buyers came in and bought that. There's some interesting data coming out right now. Not that this influences my position whatsoever, but it is interesting to kind of read through that. If I'm not mistaken, Vanguard, is it Vanguard or BlackRock? They're buying every single dip in Ethereum. Every single dip. I mean, they're loading the boat, 200, 300, 400 million dollars worth of volume coming in, loading the boat up in ETHA and Ethereum based positions. So, I mean, there's a buyer there. The bid will remain there. When we actually see the launch, I don't know. I'll tell you right now, and this is anecdotal evidence, so take this for what it's worth, but I'm a little surprised at the lack of enthusiasm for Mr. Tom Lee. I think he was doing a really good job early on of being like Ethereum's biggest cheerleader. But over the last like 6 weeks, he's just pretty much not opened his mouth again for any of it. And one thing that doesn't move the needle for us, but definitely drives conversation on big platforms like X, which holds a lot of value, at least from a sentiment perspective. You can get a lot of data from there. A lot of people follow what Tom Lee says, whether or not it's good or bad. And the fact that he's been quiet for the last like 6 weeks about his BMNR position or company or whatever, and then Ethereum in general, I think it's really spooked a lot of people. And it doesn't help that Ethereum is not performing as well as everybody had expected out of the gate, right? So kind of have this double whammy of price consolidating, which is never fun to hold through, and some of the thought leaders in the space kind of shutting up about it, not giving people a glimpse of hope whatsoever. So I'm in it. I'm in it with size. I'm not afraid to say it. I've averaged in over the last couple of months here in this consolidation fractal, so I've definitely given up my incredible entry to get more size in here. Anybody that has traded for any period of time knows what that is. You're right. We originally opened it up around 19.5 or 2000. But since then, I've averaged up into this trade, and I'm expecting this to break out into a new secular cycle to the upside with price targets. I don't know how long it's going to take to get there, but like I said, price targets of somewhere closer to 7,500 or 10,000 I don't think is out of the realm of ordinary, and I have all the way into 2027 to get there. So I want your opinion really quick on Ethereum, Bitcoin, the ratio here. This was one of the bigger reasons why we got long Ethereum to begin with. And when we got long, we said, listen, the last time Ethereum outperformed Bitcoin, it outperformed for nearly 2 years, right? So from late 2019 to late 2021, we saw over a 400% move in Ethereum against Bitcoin. But we saw periods of a couple of months, for example, where Ethereum underperformed Bitcoin. Had you have closed your Ethereum during those weeks or months of underperformance, you would have arguably missed the bigger move because, as you can tell, at the behest of every trader in the world, it's very hard to time the perfect entry all of the time. For me personally, I'd rather be a little early and wait than have to rely on the fact that I need to be in front of my charts 24/7 to catch the perfect entry. And so all intents and purposes, it looks like we're holding through one of those periods right now from late April through the middle of August. So multi-month run here. Ethereum outperformed Bitcoin by 135%. And since August, coming into our second or third month here, it's down about 15%. Is the thesis that Ethereum will continue to outperform Bitcoin dead? Or is this one of those periods of a pullback we were talking about that happens in uptrends?
is not dead. And if you want an example of what you just referenced from the previous run, you had drawdowns of 40% on ETH from, you know, uh, top to bottom. It went on again to do multi 100% moves. And so this again is just, while October is the best month median wise for Ethereum and Bitcoin, Bitcoin's average performance this month is significantly better, right? We're averaging, I think, a 58% return, or that's the median potentially, with an average return of 78% in October. Um, Whereas Ethereum's is significantly lower, right? Closer, I believe, 10%. And so this is just, again, part of seasonality. Ethereum is ranging while Bitcoin is, like we just talked about. We had a week straight of green candles on Bitcoin. We moved $20,000, and people are freaking out that we're not already at 180,000. And so this is just kind of part of the game, right? They go in tandem back and forth and kind of trade blows for who is making those biggest initial moves. I think once we see Bitcoin break out to all-time high, ETH will continue to chop for a few more days, maybe a couple weeks, and then Ethereum will have its chance.
Yeah.
That being said, when Bitcoin broke out on this past Sunday night, and into all-time highs Monday morning, Ethereum was up 4%. Like, it was outperforming Bitcoin. Bitcoin was up 1.25% at the top of the day as we were going into, I think we were touching 126 or just below that. Ethereum was up 4.3%. And so even when you're seeing Bitcoin outperformance in the sense of breaking to all-time highs, news headlines, things of that nature, like the ETH BTC chart can still go up. And so if we look at the consolidation, like we said, we saw in May into June, before the explosion, it looks very similar. We had a vertical move, consolidation, drop below that consolidation area, and then likely take off. And so that's kind of what I'm watching for. I personally think the 0.04 ETH BTC area is a bit of a contentious area. There's a good amount of price action there over the last, call it 7 years. And so I'm not surprised we're getting kind of stuck here, as well as, like we said, this cycle so far has been about consolidating below all-time highs. Let bears get really bearish and let them short at all-time highs, and then blow their backs out and send everything higher.
Yeah. I want to point out, you brought up two good points really quick. This ratio, ETH BTC, can continue to go up even in the event that Ethereum and Bitcoin both drop. If Ethereum drops less than Bitcoin, right? Yeah. This is a ratio chart, folks. Just so you know, this is not absolute. You can trade, by the way, ETH BTC. So this is a tradable pair, but the way that we're utilizing it is just which is the stronger asset, Ethereum or Bitcoin. And by the way, it does not make sense for Ethereum to go down less than Bitcoin because Ethereum is a more volatile asset, which leads me into the second portion. Volatility is a feature, not a bug. Once you understand that, you can make a lot of money off of it, partially because you can set your expectations rooted in reality instead of like in fairyland where everybody expects things to rip 57% per day. It's just not going to happen. I don't want to take too much more of your time, Josh. We've already spent about 26 minutes. I think Bitcoin and Ethereum were kind of the meat and potatoes of this conversation because most people are probably in those two trades. I know I am. Those are my two biggest positions, with Ethereum being the largest position in my crypto allocation. I want to give you 3 minutes to talk about, literally, I know I'm throwing you on the spot, anything you want. Is there a chart? Is there an overarching idea? What do you want to talk about? How do you want to wrap this up?
Yeah, that's a good thing to talk about. I think, okay, well, we can talk about Solana for a minute, and then I'll pivot really quickly. Solana looks great where it is, but I wrote an article this morning about why I prefer Ethereum to Bitcoin. It might be relevant to folks in TTI. So if we could pull up two ratio charts, Sol ETH and Sol BTC, after the outperformance we saw in Solana and relative strength from essentially the month of August all the way into September, we're starting to see signs of weakness, in my opinion. We saw a failed reclaim of the previous 2024 range into 2025 on Sol ETH. That key kind of previous all-time high level at 0.055 was not reclaimed. And so for that purpose, when looking at Ethereum versus Solana, majority of my eggs are in the Ethereum basket.
I just want to point this out really quick because it might sound confusing. He's not saying Solana is bearish. He's simply saying that out of the two tradable assets, Ethereum looks better. Okay, go on.
Yeah, exactly. Again, I still hold both assets, but for the time being, I would say I'm not adding any Solana. However, Ethereum it has that possibility because it hasn't been able to reclaim that range. And I think I would change that tune if the SOL ETH ratio can kind of get back above the 0.055 level.
Yeah, I'm on,
Same,
yeah,
same,
I'm on board.
same thing with SOL BTC. It was really strong in 2024 and really tightly held above an area of support that I'd kind of aim at, let's call it 0.02, 0.019. And we lost that during the tariff tumble this year, kind of February heading into the April lows. And same thing, we saw a lot of Solana strength for the month of August and September against Bitcoin as well. It rallied hard. It had those treasury company backings where, it ran from $200 to $250, has since retraced that. But in that same way, it wasn't able to hold this range and is now underperforming Bitcoin and Ethereum, but underperforming Bitcoin.
Which, by the way, I want to point out, I did not expect this, and I think this is one of the better parts of being a TTI member, is that my opinion was that Solana, at least 2 months ago, was a better opportunity for allocating capital than Ethereum. Ethereum had just run up nearly 100%. We were consolidating underneath all-time highs at that point. I didn't realize we would still be 2 months later, but Solana was bouncing against Ethereum. Solana was bouncing against Bitcoin a couple of months ago, back in August. And so I said, let's go ahead and rotate some of the capital that, by the way, we weren't closing winning positions. We were forced to close winning positions because expirations came up. So we had a bunch of free capital. Instead of buying into Ethereum or more Bitcoin at the time, we said, let's go ahead and throw a couple bucks at Solana. I bought a lot of Solana. And in the short term, it worked. But what we've noticed, and for those of you in TTI, right, I talk about this once or twice a week, but I'll say it again. The reason why we're not adding it as Solana is not because we've lost faith on an absolute performance basis. Solana is still doing exactly what we've been talking about, basing underneath all-time high. We're still hitting higher highs and higher lows. Primary trend's still up. We're still in a bullish momentum regime. So odds are this price will go higher. But remember, we're not here to hit a winning trade. That's for 5-year-olds. You can teach a 10-year-old how to draw a triangle on a chart and catch a breakout. We're here to capitalize on the best trades, the best possible setups. We want to make the most money. And the weight of the evidence has now shifted against Solana, as Josh is saying. So right now, last week we added more Ethereum, we added more Bitcoin. We did not add Solana. We haven't added Solana in weeks, months at this point. Why? Because the trade is starting to fizzle out on a relative basis. It still looks good on an absolute basis, so we're not closing any of our open positions in it. We have expirations into 2026, etc. But from a relative standpoint, it's not the greener trade, right? We're always looking for greener pastures. That was Solana in August, at least it looked like it. That has fizzled out. So Josh is absolutely right. Solana against Ethereum and Bitcoin. And who knows? Maybe in 2 or 3 weeks, this ratio kicks back up. It's not like it's completely fallen off. But we're not quite there.
I would even say, there are catalysts coming for Solana. And so when I say that we're not trading it now, that's just, for the short term, because I believe by the end of this week, so tomorrow, we should know about additional Solana spot ETF approvals, and then those can launch within a few days. And so we might have, a highly liquid Solana spot ETF available to traditional markets in the coming week, right? And that could be a strong catalyst if Solana can capture even 1% of what Ethereum's inflows have been over the last year. And so with the smaller market cap, with the smaller market cap, we can look to, see that kind of explosive growth on Solana. In my mind, I think all of these things are kind of lining up for those big three, as well as a number of other assets, but those big three to explode upwards into new all-time highs in the coming weeks and months. And that's something we'll adjust for and be ready for when it does happen. Go ahead.
Last thing I want to say really quick is, if you're bullish Q4 in the TradFi market, which I'm not going to, go into that conversation. If you're interested in that, go listen to the X space from yesterday. Randy and I break it down over 45 minutes. It's a very, very good conversation. But we're bullish Q4, at least the way we view the market, the weight of the evidence continues to suggest that not only are we going to have a good Q4, but we're probably going to have a really good Q4 here, particularly in risk on assets. It's hard for me to wrap my brain around a TradFi market ripping higher through Q4 and crypto not participating at all. It's the same argument as kind of small caps. People expecting bear market to come relatively soon, small caps after We're just hitting our 3-year mark now in this bull market, going back to the October lows of 2022, and small caps are just now breaking out. It's hard for me to wrap my mind around the fact that small caps would never get a serious play in this bull market. It's the same idea with crypto. It's hard for me to wrap my brain around that. We haven't seen the same sort of average returns that we normally do in a bull market cycle for crypto. We haven't. We know that. You can look at previous 5 bull market cycles and we're underperforming the cycle. So again, and by the way, I'm not saying that it has to outperform. I'm just saying it's hard to imagine. So when we're putting all of this together, we look at, obviously price is the most important thing we look at. We build the narrative through price. What's price telling us? What's trend? What's momentum? What's relative strength? What's sentiment? Randy just came out with a really good chart showcasing that generally speaking, tops tend to occur, at least in the crypto space, with a surge in Google searches. So I thought that was interesting. Bitcoin and crypto in general is very mute right now. Even though Bitcoin's at all-time highs, the Google search trend is actually down. So it's not like retail's FOMOing in. Everybody under the sun isn't talking about Bitcoin again. So if you're thinking about, is Bitcoin frothy? Is crypto frothy? Well, at least based off Google searches, it's not at all. Which has been a pretty reliable indicator over the last couple of cycles, right? So we take all of this into account. Everything continues to suggest higher prices. Sitting and holding these positions and waiting for it can just be emotionally taxing, which is why I'm glad we can have these week-to-week conversations to hopefully breathe life into people, that are sitting in these positions and they're kind of just twiddling their thumbs waiting for them to go. I think the hardest part about any of this is missing the breakout, missing when it occurs, and then playing the catch-up trade. So for those of you that might have been late to Ethereum, if you were looking late May, early June to get long, it's very hard to get long Ethereum after the original breakout in early May because you never know where the top is. You buy it, 2 days later, it pulls back, you think you bought the top, you close it, 3 days later, you're back up at a new highs, you buy it again, a week later, you're down back below you bought it, you sell it again, you think it's a Ponzi. Meanwhile, the people that got in near the bottom, not necessarily the bottom, but near the bottom, are just holding because they realize trends are up and they have this big buffer. I think that's kind of where we're at right now, is if you can hunker down, you have enough expiration for trading options, or if you're trading spot, draw a line in the sand that makes sense where your positions don't make any sense anymore, and just wait. Because I think when this market goes, the catch-up trade is going to be the hardest trade in the market. You're going to constantly be trying to find a foothold. And when everybody's trying to get long, the market tends to screw as many people over as possible. So that's where I'm at. That's where I'm sitting. I think this goes higher. Sit tight till it does. Any parting words, Josh?
I would just say, for folks in TTI, I wrote a really quick newsletter yesterday, looking at some additional resources for people who kind of want to stay on top of, if they think the market's topped. And CoinGlass is a really good resource looking at 30 indicators of market tops. I'd say about half of them are price action related, so things that we focus on in TTI. The other half are, ratios and different scoring mechanisms. And I would say that 0 of 30 of any of those indicators have hit in the last 2 years. And so what does that tell us? It tells us that, from the work that we're doing here in TTI, looking for market tops, looking for price, market structure, trends, and then kind of those additional 30 indicators is we have plenty more room to go. And I would say, like you were just saying, get into your positions, get ready, draw lines in the sand. If you're using leverage, don't go high leverage because, we're going to get these leverage washouts.
See it every day. I mean, you see it every single day. The market pulls back, or the crypto market pulls back like 1 or 2%. And you look at X and it's like 1 billion longs were just liquidated. And you're like, how tight were your stops? How over leveraged are you to lose to get liquidated on a 1% pullback? It's insane. It's insanity.
and so the recommendation is get longer dated contracts for options, lower your leverage exposure. You don't need to be running 15, 20, even 10x. And like you said, with spot, draw a line in the sand and let it work for you. There are plenty of charts that look really good, that are at opportunities where you don't want to chase into maybe a breakout, but you can sit here with some clear risk reward levels and just wait out the market.
Yep. Okay, I think that wraps it up. Josh, you have a question, but I'm going to go ahead and let you answer that when I post this over on the market research side. Question about Zcash. So if you want to throw that chart into chat, actually go to the chat room. Let's post that over on the market research side. Just go ahead and pull up Zcash when you have a couple minutes, chart that, and throw that over there.
I was going to talk to you about it actually today.
Okay, well, we don't have time today, but guess what? We can go into the chat room and talk about it. So if you're a TTI member, look at the chat room in about 20 minutes. We'll talk through Zcash. If you're not a TTI member and you want to make a bunch of money in the market and capture the Q4 with the rest of us, link is in the description wherever you're looking, either Twitter or YouTube. I'm telling you, we've had arguably the best year we've had. Last year was the best year, but the way that the end of this year is shaping up, this will probably surpass last year. So Josh, thank you so much. Thank you for keeping us up to date in crypto every single week. I very much value your opinion. And just so everyone's fully aware, I'm on vacation next week, so I will not be hosting the TTI Crypto Report. We'll try to get Josh to host it solo. You'll probably have more fun with him anyway. So Josh, thank you so much. And you'll pick this back up next Thursday.
That sounds great.
See you guys.